And welcome, it's Mary Ellen McGonigal here with your Friday afternoon MEM Edge show. As always, this is the show that puts you in front of where the action is in the broader markets. Although we did end flat, certainly with the S&P 500, lots of action beneath the surface that we will go ahead and take a look at. First up, some of the data that drove price action last week, and it was all about employment data. Investors were on the lookout for weak employment numbers to substantiate the possibility of an interest rate cut in September. And we did get that, perhaps a little too weak with today's broader market numbers. We're going to take a look at that, as well as the impact on the sectors, industry groups, individual stocks. There were some interesting news-driven items this week that pushed particular areas, and most notably was earnings. So we'll get into some of that as well. Next week, you will want to know that core CPI and PPI inflation data will be released, although with those weak data today on the employment, it may not be as impactful. So let's go ahead and take a look at these markets and see where did we close for the week. And here we are with the daily price chart of the S&P 500. As noted, we did close up just a little bit, but looking at these daily price bars, you can see that we definitely had a volatile period this week as investors grapple with the possibility of a weakening economy relative to strength in particular areas that we will get into. So we do remain in a confirmed uptrend. We have that RSI, which is positive, MACD. Now, not a lot of explosiveness. We are seeing generally sideways action over the last couple of weeks. However, as you may well be aware from recent shows, there certainly are pockets of strength that are taking place in the markets. We will get into that. Let's take a look at the Nasdaq composite, and it did fare better than the S&P, and all about earnings that came in today with a major semiconductor company. We'll get into that, but we did experience this nice base breakout in the Nasdaq. RSI is positive, as is the MACD. So from here, let's go ahead and take a look beyond the broader markets at some of these sectors. And here we are, the 11 sectors in the S&P 500 sorted by relative strength, and we're looking at a 2-month daily price chart view. So let's take a look. The S&P 500 is up here at the forefront. In fact, that signals to me that I did not sort this by that relative strength, but you can see how that can be accomplished. You add that RSI indicator and then sort the sectors in descending order. So first up, we have XLC. This is the communication services sector. Not a big surprise. This is all about Alphabet surging higher. It is a major component in this sector, and it has to do with the potential lawsuit against the company being put to the side. And that was great news for the company and other areas as well, such as Apple, that does derive a lot of their advertising income from Google. So let's take a look here at some of these other areas up here at the forefront. This is consumer discretionary, XLY, sitting up here quite nicely. A couple of areas in here that fared well. Homebuilders, certainly among the strongest. We'll get a look there, as well as some of the add-on areas to those home builders that fared well. And then healthcare sitting up here. This is all about biotechs. We'll take a look at that chart as we move through. And then, of course, you do want to be aware of these weaker areas. You can see the bloom is off the rose for these utility stocks, XLU. They have now decisively closed below this 50-day simple moving average. We've highlighted this negative RSI last week, but we are continuing to see weakness in that utility. And then also staples. This is another area that was weak last week as well. A little bit of vibrancy there, but we are still in a downtrend among these more defensive staples and utilities. Let's take a look at industrials. They did falter this week. And in fact, on Wednesday, they were in a downtrend. XLI is the ticker for the industrial sector. You can see we closed below that 50-day and a negative RSI. Now, we were able to regain that 50-day simple moving average, but we still have a negative RSI and that MACD poised to turn negative as well. I will share with you certainly one of the weaker areas in that industrial sector, but this is all about the employment data signaling a slowdown in the jobs market, and hence these economically sensitive areas such as industrials experiencing weakness. Also, energy, top performer last week, and it did pull back sharply. This is another highly economically sensitive area, and we can see it gave up last week's gains, and we now have a negative RSI. And there's that volatility that I mentioned that is very inherent in September into October, where you have groups come in and out of favor. However, we're going to talk about one group that remains quite strong. Let's take a look at financials, another highly economically sensitive area, down almost 2% today, but retaining that uptrend. So that is a view of the broader market sectors. And I did also want to point out to you technology. This is another area that earlier in the week, it did turn negative with a close below that 50-day simple moving average and a negative RSI. However, you can see that we did regain some of that weakness. We now have a positive RSI. Today's price action having a lot to do with that. Nice high volume. However, we do still have this MACD signaling that momentum has still languished here of late within technology. Surprisingly nice to see the Nasdaq faring well despite overall general weakness in technology. From here, let's go ahead and take a look beyond these 11 sectors. We are using ETFs that really encapsulate the markets and drill down further beyond those broader sectors. And again, 2-month daily price chart view with that RSI descending order. And you are going to see a lot of the same characteristics, or certainly similar to last week, are continuing. And that is, first up, the move into gold stocks. These stocks do tend to fare well as interest rates come down. We'll take a look at that yield on the 10-year, but we are at a new high. Last week, if you haven't seen that show, you may want to. I highlighted several gold stocks, and they're faring really quite well. We talked about healthcare, and here we are with IBB. This is that biotech ETF, and it is breaking out of a very lengthy base, taking us back to February. As those of you may know, the longer your base prior to that breakout, historically, the longer your advance out of that base. And we are seeing vibrancy within the group, large cap and smaller names as well. Also on the move again this week are solar stocks. This is TAN, and you can see up almost 5% today. Nice gap up out of this very orderly base, signaling a new potential uptrend. Now, we will take a look at TAN and one of the names within this group. However, of note is we did get this gap up in mid-August, all about as far as tax purposes and favorable tax incentives. And we had that gap up, but then a move into sideways price action. We did have a gap up back here. So we may see a bit of consolidation. 5% move is quite hefty, certainly for an ETF, but generally net, that uptrend very firmly in place. Now, here's another area. I talked about consumer discretionary being at the forefront, up 1.5%, and a lot of it had to do with XHB. This is the Homebuilders ETF. As interest rates decline, we are seeing a pickup in these home building stocks. And you can see, again, a nice orderly base breakout today, nice heavy volume. I am going to share with you that it's not the entire group. There are some names that are faring better, and I'll also share with you why. Now, moving through further, we can see small caps up here. Nice advance orderly, finding support at that upward 10-day simple moving average. The group was up about 1%, but we did get some very nice volume today on that advance that the group ended the day in the upper region of its trading range, which is really quite bullish. So keep your eye on small caps if you are not involved there yet. Certainly IWM does serve well as a proxy as well. XRT, this is a retail ETF, the S&P Retail, and you can see that it did fare well. Also, this is another economically sensitive area, but we will get into one area in particular that is faring well, and certainly Amazon is a big component in that area. We'll talk about that today as well. Let's take a look at semiconductors. Last week, they were in a rather confirmed downtrend, trading below that 50-day simple moving average with a negative RSI. Price action over the last 2 days, we did regain that uptrend. We're now back above these shorter term moving averages. We have a positive RSI and a positive MACD. Now here we are not getting that explosive move higher. Ideally, we want to see this black line up through the red, but I did mention that this is another have and have not area relative to the underlying stocks, but nice high volume on today's trading activity, which is certainly quite encouraging. Software is still struggling. It's a very mixed group. You can see that we still are below that 50-day simple moving average, that RSI below 50, and then that MACD below 50 as well. There are over 300 software stocks that are traded. And again, it is going to be, you need to be selective as far as the areas that are participating relative to those that are in a downtrend. So from here, let's go ahead and take a look. I talked about those home builders. We are going to look at names in that space. And as noted, I will share with you as far as why certain names in the home building space are trading higher. Now, here we are with DHI. This I have pointed out a couple of times as being the leadership name. And how is that identified? We can go back to mid-July, this move back above this 200-day simple moving average, super high volume. And this was one of the first names out of the gate. So when you have a movement back into a particular group, oftentimes that first, certainly well-funded name that is out of the gate will go on to lead the group. It will oftentimes continue to lead as long as that group remains bullish. But let's take a look at another stock that is very early in its potential downtrend reversal, and that's Century Communities, CCS. And you can see that we have that similar downtrend reversal price action, the move above that 200-day. However, this is a smaller company, not as liquid, not as widely followed. We're not seeing that super high volume, but we do have a positive RSI and MACD. So of note here is while this particular stock is compelling, we're in the throes of reversing this downtrend. Oftentimes, you were better served to stick with that leadership name. It will go on to continue to outperform. From here, I did want to share a couple of other names. CCS is among these names that I'm going to share with you. Two more housing stocks, LGIH. This is LGI Homes, not quite up there as far as reversing that downtrend, certainly a laggard relative to that leadership name. And then last up, we're going to take a look at DFH. And the reason I am highlighting these stocks, DFH being among the certainly stronger name as far as having reversed that downtrend, but a lot of volatility. And the similarity among these three names that I'm sharing with you is the fact that they are smaller in market cap size, but more importantly, they do focus on first-time home buyers. They are involved with single-family homes in communities that are lower priced, very family-oriented, and this is a newer area to the move into these home builders. As interest rates potentially are lowered, it will allow these first-time home buyers to come into the market. From here, I also want to share with you a name today that I'm sure many of you may have seen came out with earnings, and it really precipitated a nice move into those semiconductors and other areas. And here we are. This is Broadcom, AVGO. I'm going to go ahead and mark this up because the stock is not only a major in AI related chips, but also a leader in its group. So let's go ahead and take a look at that gap up, super high volume. Now we have that MACD crossover, that black line up through the red, indicating a new uptrend. And then we, of course, have that bullish RSI. So oftentimes, when we have this type of sharp advance, you may see a period of consolidation. It could take place by way of a flat base, a flag formation before another leg up. But net, it is bullish for the stock. And Broadcom, their big advance today, and it was up 9.5%, has everything to do with the company coming out with earnings, stellar AI chip related earnings, but more importantly, their CEO announced a $10 billion new client that they have secured for their chips, their AI related chips, and it is speculated that it is OpenAI who is their new client. So certainly a very valid reason for the company to fare better. But more importantly, let's take a look at other names in the semiconductor space that also moved in conjunction with Broadcom. This is something I speak about a lot as far as that move in among peer stocks, and oftentimes it will need to be directly related. Here we are with TSM, Taiwan Semiconductor, regaining its uptrend. We had this nice double bottom formation. This had been on my MEM Edge report, but however, last Friday's break below that 50-day simple moving average coupled with a negative RSI and MACD, we did remove it. I certainly will be reconsidering it because we are now back up in an uptrend. The company does manufacture the new Gen AI chips, and they are going to be a part potentially of Broadcom's move into that area. Also, another company that fared well on the news is Celestica. Nice base breakout here, nice volume, an uptrend taking shape. And this is another potential beneficiary of Broadcom's announcement as far as their move to help OpenAI with their chip involvement. Now, not all the news was good. Let's take a look at Nvidia, of course, and I'm going to go ahead and put the proper ticker symbol in here, and let's take a look. Nvidia is now very much below its key 50-day simple moving average with a negative RSI and a negative MACD. And the reason this particular stock was down certainly today, but you can see overall it has been in a generally declining phase here for the last 3 to 4 weeks, and then very pronounced today. And a lot of that having to do with the fact that Broadcom's announcement does present potential competitive disadvantages for Nvidia. We are seeing these bigger tech firms begin to emerge and create their own chips. And certainly it is a negative for Nvidia, competitive pressures. One other name that is well known, 2 reasons it's down today. This is Advanced Micro, AMD. One here is that competitive disadvantage, but also a Wall Street downgrade with AMD, a negative RSI, and now a negative MACD. The company had been migrating quite a bit higher because of excitement about their rather late but still advanced move into AI chips, which has certainly lost its luster. Another move, or certainly other areas that in the semiconductors, I talked about it being a have and have not industry group. This is a smaller company, CRDO, And we can see this nice gap up. This is all about earnings. So once we get that gap up, super nice volume, what you'll want to do is take a look at their prior earnings release. This is taking us back to the beginning of June. Here we are with that gap up. In this case, the period of consolidation following that gap up was an orderly pullback to its 10-day simple moving average. However, of note is on that gap up last quarter, the stock did get into an overbought position with the RSI. We are not there at this point in time, but I wanted to highlight how useful these moving averages can be. So I'm going to replace that 200-day simple moving average with a 5-day simple moving average, and that becomes your new area of potential support once a stock begins to take off. And again, we can go back to that gap up period, and then once that uptrend really took hold, pullbacks to that blue 5-day simple moving average did become an ideal buy point. I talked about consumer discretionary XLY. We'll take a quick look at the overall sector group and highlighting that we are at a near-term high, so overall bullishness. And let's take a look at some of the biggest movers in this space. Certainly this week, we can take a look at Tesla, and the stock was certainly outperformed the broader markets. Just of note is the fact that the board for Tesla did vote and put in a new package for Musk. Incentive-wise, it has an awful lot of hurdles that need to be overcome. And if so, Musk will land quite a big payday, and that in turn, it's suggested should help the company. I will say, however, today's gap up about 3.6% big volume. We're not seeing a sharp move and really not a lot by way of conviction as far as the possibility for the stock to really explode. Keeping an eye on that up at about this 360 level. We are going to want to see a pickup in the momentum. We do have a positive RSI, which is constructive. Let's take a look at Amazon, a heavyweight in XLY as well. And you will see that we did have a gap up yesterday in the stock. The company has announced that they are in more talks with Anthropic, which is a startup AI company responsible for their product Claude, which you may be familiar with. And that is expected to provide AWS division of Amazon a lot by way of growth. And you can see the response here was that gap up into this base breakout, poised for a longer base breakout. So good news there with Amazon. Also in the consumer discretionary space, this is going to be earnings related, a little bit early here, but this is Ollie's bargain outlet. And I highlight it because you can see it's a smaller firm, highly volatile. But if we go ahead and pull up that weekly chart, you'll get a sense that historically, when it gets going, it could be interesting, certainly maybe for a swing trade. But in response to their earnings, we're now back above these moving averages with a now bullish RSI. And then we are poised or on the cusp of a nice MACD crossover, that black line up through the red. And then from here, we can take a look at those M7 names and see where we stand, because the equal weighted indexes have moved differently from the weighted. So I'm going to take us down to this grouping where I'm going to share with you a view of those M7 stocks, because certain names such as Microsoft are not faring well. And here we are. We're going to take a look. I do have the charts here. This is something that you can do, those that are subscribers to Stockcharts.com. And then once you have a given list, it can be your watch list, your portfolio. You can then view it in any number of ways. And I am going to use that Candle Glance 2-month daily price chart view with that RSI in descending, because it very quickly gives you a sense of strength relative to weakness. We talked about Alphabet and that gap up on their news this week. Apple was a beneficiary as well. And here we are with that nice gap up into a base breakout. But let's take a look at some of these areas that are lagging. And that, of course, I talked about it, is Microsoft. And you can see that we are very decidedly in a downtrend below that 50-day simple moving average, very high volume. We now have a negative MACD that is joining an already negative RSI. And then this pattern that I've talked about in the past, I call it a hemorrhage with a wedge when you have a significant move downward on any given name. And then oftentimes the stock will trend sideways in that wedge period. And about 80% of the time, you will experience another leg down. But I did want to highlight the fact that Microsoft lost its near-term luster, but coming back into play is Netflix. And you can see yesterday we had this nice move back above that 50-day, down about 1%, which is not a lot given yesterday's move higher. But I would argue that we've regained that uptrend in Netflix, which is, of course, good news. We talked about Nvidia and Amazon. Let's take a quick look at Meta Platforms because this stock has been waffling a bit here. We're not seeing a lot by way of really clear-cut signals, but I will tell you the RSI at least is back up above that 50 area. We were down below the 50-day moving average with a negative RSI. So struggling to regain, but we don't have that uptrend momentum. We're going to want to see that black line up through the red to signal that Meta is out of the woods. And that is it. If you like what you've seen, go ahead and hit that like button. Also, I have regained control of my MEM investment research firm. It is live today. I'm going to put a link down there below so you can have a free 2-week trial of my twice weekly MEM Edge report. I urge you to take advantage of that offer as well. Everyone have a fantastic weekend. I'll look for you here again next Friday.